All right, let's dive right into what to expect from BankUnited's absolutely crucial fourth quarter earnings report. We're going to break down the key numbers everyone's watching, the totally conflicting stories from Wall Street analysts, and what this report could really mean for the bank stock this year.
So go ahead and mark your calendars. January 25th, 2026. That's the day, right before the market opens, that we get all the answers. It's really the moment of truth for their fourth quarter.
And look, this isn't just another quarterly update. It's a major test for the bank, and it's going to set the tone for the entire year to come. So the big question is, are you ready to read between the lines? But before we get into the forecast and all the drama, let's quickly lay the groundwork. Who exactly is BankUnited?
So BankUnited, ticker BKU, is a regional bank, but here's what's cool about them. They're strategically planted in some of the hottest markets in the country. We're talking Florida and the New York metro area. That focus on high-growth areas is a really big part of their story.
So how do they make their money? Well, it's a pretty classic banking playbook. They've got your commercial and consumer banking. They do wealth management, but they really focus on the fundamentals, lending money out and gathering deposits. The key thing to remember is their focus on steady net interest income. That's their bread and butter, the profit they make from the difference between loan interest and what they pay on deposits.
All right, now for the main event. Let's decode the numbers. You can think of these as the tea leaves we're going to read to see what the future might hold for them.
One of the most important metrics you've got to watch is the net interest margin. It's a core measure of how profitable a bank is. And you can see here it actually got better from Q2 to Q3, which is a great sign. The huge question for this report is, can they keep that positive momentum going?
84 cents. This is the magic number to keep in your head. It's the consensus forecast for their earnings per share, or EPS. Basically, it's how much profit Wall Street thinks the bank made for every single share of its stock.
And where do those earnings come from? Well, revenue. The street is expecting BankUnited to pull in just under $280 million in total income for the quarter. That's the top-line number that everything else flows from.
But, it's not all about profits. We have to look at the risk side, too. Analysts are forecasting about $376.5 million in non-performing loans. These are the loans where borrowers have fallen behind, and it's a super critical indicator of the health of their entire loan book.
So, with those numbers as our backdrop, let's get to the juicy part, the two competing stories playing out on Wall Street. You've got the bulls who are optimistic and the bears who are, well, a lot more cautious.
Leading the charge for the bulls is Raymond James. They just started covering the stock and right away gave it an outperform rating. That's basically analysts speak for, we think this stock's going to do better than the rest of the market. That's a strong vote of confidence.
And they're not alone. Jefferies also upgraded the stock to a buy. But what's really interesting is why. They're pointing to potential M&A interest, meaning they think another company might want to buy BankUnited. And they also think the stock is just a good deal at its current price.
So here you can see the two arguments side by side. The bulls are all about that strong core income, the M&A rumors, and continued deposit growth. The bears, on the other hand, are worried. They're seeing rising credit costs, pressure on profit margins, and a potential increase in those non-performing loans we just talked about.
So, with all that swirling around, what should you be looking for when the report finally drops? Let's put together a little pre-game playbook.
Okay, here it is. 4 simple but critical steps. First, that 84-cent earnings number. Did they beat it or did they miss? Simple. Second, that net interest margin. Is it still growing or is it starting to shrink? Third, credit quality. Are things stable or are those bad loans starting to creep up? And finally, step 4, you have to listen closely to what management says about the future. Do they sound confident or cautious about 2026? Their tone says everything.
Hey, for those of you who want to go a little deeper, you have to look beyond the headlines. Are they growing their low-cost deposits? That's cheap fuel for their business. Are they actually lending more money? How strong is their financial foundation? And for a lot of people, this is the big one. Is that 31-cent quarterly dividend payout still looking safe? These are the questions the pros are asking.
Okay. Finally, let's zoom out and look at the big picture, because no bank is an island, right? You have to understand the whole environment that BankUnited is operating in. There are 3 huge forces at play here. First, the interest rate environment. Any changes there will hit their profit margins directly. Second, competition and consolidation. Can they compete with the big guys, or will they become a takeover target themselves? And third, you have to compare their credit trends to the rest of the industry. Are they doing better or worse than their peers?
And this chart, this really says it all. When you look at the range of what analysts think the stock is worth, there's a huge spread from the low end to the high end.
This just perfectly visualizes the uncertainty and those competing bull and bear stories we've been talking about. This earnings report could easily push the stock toward either end of this spectrum.
Which brings us to our final big question. When we get those numbers on January 25th, are we going to look back on this report as the launch pad that sent BankUnited soaring into a strong 2026? Or will it be the first warning sign of some serious turbulence on the horizon? That, my friends, is what we're all waiting to find out.